Welcome to the AAA Storage Podcast, your integrated real estate and development partner exploring all things self-storage investing to bring you diversified success. Let's dive in. Hello, and welcome back to another episode of the AAA Storage Podcast. Today, yet again, I have Paul Bennett. Thank you so much for joining us. We are going to be talking about flex and office space for some investing projects that you guys have. And so I know we've talked a lot about self-storage and real estate and investing in general, but there is this specific segment that you guys do invest in and work in. And so I wanted to hear more about that. Why invest in this space? Why, does it diversify your portfolio, or how do you think through it from your perspective as well as the perspective of the investors? So, Paul, I'll let you take it away, but thanks so much for your insight, as always.
Yeah, Brandon, always great to have time with you. And I promise we've got some things planned in some future episodes where we're going to invite some other folks in so everybody doesn't have to listen to me the whole time. But yeah, I'm glad you brought up the Office Industrial Flex product. It's an important part of what we do for a variety of reasons. First, to define it for people. Everybody's seen it, but you may not know the term that's used to refer to it. Office Industrial Flex refers to commercial real estate, typically a building that's subdivided into multiple bays that has in each of the bays 1,000 to 2,000 square feet of office space in the front and another 2,000 or 3,000 square feet of warehouse space in the back. So it's the kind of real estate where you'd see a plumbing contractor or a general contractor or a last mile logistics company that has an office function up front but needs warehouse space in the back. Very, very popular type of real estate, particularly in today's markets where you've got all of the internet commerce and the last mile logistics activity that has been added to the traditional users of this space. Like I said, an HVAC or plumbing contractor, a pest control company, all those types of users are the people that you find in this real estate. The product that we build in Office Industrial Flex looks a lot like a storage building on steroids. We don't build a Class A product that's tilt-up concrete or a brick exterior. It is essentially a slab-on-grade concrete building or floor with a metal building. The buildings are typically about 20,000 square feet. We divide it into multiple bays and then finish out the office in the front and the warehouse space in the back. But it's a fantastic product, and we started building this product about 11 years ago. And if you think about it, it's actually very synergistic with self-storage. First of all, these kinds of facilities are often found in the same part of town as you'd see a self-storage facility, sort of on the outskirts in areas that are often a mix of commercial and residential types of real estate in the same area. Secondly, believe it or not, we have a lot of customer synergy between the two products. We have Office Industrial Flex tenants that actually need additional storage space, and so they rent storage facilities. In the storage world, we have a lot of people that run their business out of a storage facility, and as that business grows, ultimately they outgrow the storage facility and they can move into an Office Industrial Flex type of situation. So what we started to do is we found that as we looked at markets that we really liked, and we found larger tracts of land, we were able to buy, instead of 4 to 6 acres for a self-storage site, we might buy 12 to acres and divide it and do an Office Industrial Flex business park on one part and self-storage on the other. That allowed us to get a little bit better land cost, because buying a larger tract of land, you typically pay a little bit less per square foot than you do a smaller tract. And then secondly, there's some synergies and cost savings in the site development and the utility development. That was an initial part of the development process. So it sort of fit well with self-storage. We started doing it about 11 years ago, and we've had tremendous success over those 11 years building projects that generate fantastic cash flow and ultimately have real value in the marketplace.
Very cool. Okay, so what I'm understanding is there's the self-storage has been kind of the prime vehicle, but then there's this other one that kind of really complements it really well. Why is that helpful for an investor? If you think folks listening to the show, okay, good. How does that help them in their portfolio or the fund's portfolio, or how does that kind of work out?
Well, we've talked about it in some of our earlier conversations, but diversification as a risk mitigation strategy is always important in any investment, right? What this gives us is the storage projects that we build, particularly in the fund environment where a fund owns multiple properties, gives you diversification across different markets. And that's a very important aspect. Secondly, when we add a second property type to the fund, it gives you diversity across property types and markets. So it really is adding an element of diversity. The office industrial flex tenants, it's a B2B environment. So we're renting to businesses in the storage industry. Most of the time we're renting to individuals, consumers. So it's a B2C environment. And they're disconnected, which gives you some diversity in terms of that customer base and type of customer base and what might influence levels of activity in one versus the other. So it just adds some diversity. And it's very similar to the storage product. The same crews that erect our self-storage facilities do the construction on the office industrial flex product, because it's essentially, like I said, it's slab on grade, as a foundation, and then a metal building. The office industrial flex product simply has a 30-foot clear span ceiling inside, which obviously storage facilities don't. And so it's a very similar product to build. We were able to leverage all the knowledge and experience we have building that type of product into the office industrial flex product. So it's been a really efficient and great add to what we do. The current fund is about 60% of the equity is allocated to the self-storage space, and the other 40% is allocated into the office industrial flex product that we're talking about now.
Oh, yeah. Okay. Is there any kind of extra due diligence or anything else in the process that's helpful for investors to know? Like if they are wanting to invest in this space or invest in this space with you guys, that there's a little bit different nuance as far as, anything else with the self-storage as it currently is? It's
a different end customer. So the due diligence process, we've talked about the fact that in storage, we look at square feet that are available of self-storage in 1, 3, and 5 mile circles around the site, because storage is a hyper-local product, and you're generally going to get a customer that lives within 5 miles of your facility. The office industrial flex product is a different tenant. It is not quite as hyper-local, but you have to look at the supply and demand for that type of real estate in the market as part of the due diligence when we're looking at a particular site to make sure the demand is there for that product. So it is different due diligence simply because it's a different customer base in a different market. But in terms of anything else, I don't know that it's tremendously different.
What kind of future outlook do you guys have on this product or in this market? So is there any kind of trends or maybe opportunities that you're seeing in the next 12 months, 5 years, 10 years, anything like that you guys are paying attention to that investors should know?
What got us intrigued with the product 10 years ago, more than 10 years ago, was the level of demand. If you look at the data across the country today, office industrial flex shows about a 4% vacancy rate. So 96% occupied.
Amazing.
And if you talk to just about anybody, in fact, I've had people that really aren't in the real estate business, but just sort of pay attention to what's going on business-wise in their community. In a lot of communities today, you can't go find office industrial flex space to lease. And it is that traditional tenant base that we've talked about. And in addition to that, now all the last mile logistics and internet-based businesses, it's been really funny lately. We have a project in Texas just outside Austin right now. And all of a sudden, I don't think we'd ever rented to this type of tenant before, but we leased out a whole 20,000 square foot building to a pickleball club or facility.
Yeah.
Another 15,000 square foot building to a batting cage operator, a franchise. So we've got this weird mix in that project. We've got this weird mix of people that are providing consumer sort of oriented services and then businesses that are just using it as their base of operations and their hub to support their field operations. So it's a very diverse tenant base. Occupancy rates across the country are extraordinarily low. And the other dynamic that's very similar to self-storage and is, again, what sort of attracted us to this product originally is that we talked about the yield on cost in self-storage being at around 9.5%. Our yield on cost in our office industrial flex product is typically 100 basis points higher than that, somewhere around 10.5, 10.75. And so the economic efficiency and value creation that you get is very similar. The one difference with office industrial flex is that cap rates for that product are about 100 basis points higher than they are in self-storage. But you wind up with the same development spread. The difference between the yield on cost and the market cap rates for that product both represent about a 3.5% spread, which again, if you've listened to any of the earlier episodes, that's where the value gets created in the development process. So it has financial dynamics that are similar to storage. It has locations that make it very synergistic with storage. There's actually some customer synergy, and it's a very efficient, effective way to create value in the marketplace. So that's sort of how we wound up in that business.
Man, amazing. The way you're talking about it is like, man, maybe it doesn't need to be 60-40. It should be 50-50, 70-30, getting more of the flex space. It sounds amazing.
Yeah, the current fund, we have a total of 5 sites. 3 of the sites are a combination of self-storage and office industrial flex. 2 of them are self-storage only. So we have a total of 5 self-storage projects and 3 office industrial flex projects in the current fund. And I think for now, we'll probably keep that sort of mix, that 60-40 split. The way the market feels right now and the data is telling us that that's a good balance. And I think Fund 2 will probably stay in that same range.
I like that. Amazing. So, okay, tell me anything else that folks should know about this. This is just sort of a blanket statement. I know you've been thinking about it for a while and have been doing this for a long time.
I'm kind of comparing the 2 product types because we've talked so much about self-storage in the last several episodes. I think the other thing to know about the difference in the projects and product that we're building in office industrial flex is that our leases with tenants in the office industrial flex space are generally somewhere in the neighborhood of 3 to 5 years, and typically have a 2% escalator, maybe a 3% escalator year over year in terms of the rental rates. They are also triple net leases, which means the tenants pay all taxes, insurance, and utilities, and common area maintenance. The dynamic of a longer-term lease and a triple net lease makes the cash flows from the office industrial flex product more stable and more predictable than you typically would get in self-storage, simply because you basically have a month-to-month lease with a self-storage customer. And, the expenses in storage aren't great, but they're all absorbed by the operator, not the tenants don't pay any portion of the operating costs of the property. It just balances really well, the 2 products together. And we do separate them when we build both on the same site, because we know ultimately one buyer is not going to probably want both property types. They're either focused on self-storage or they're focused on industrial flex. So we set the property up from day one so that we can sell those 2 projects separately, even though they were originally on the same tract of land.
I live here in Fort Worth, Texas, and so when I'm driving around DFW, I feel like I see a lot of these kind of properties, especially in some of those logistics hubs that you're talking about. Kind of this, you see the offices up front and then these huge, giant warehouses afterwards. So I've always wondered, where those are, I guess, where they come from, who's in those kind of spaces. Yeah,
and those may be logistics oriented just because they're near the airport. Always hard to know, but if you wonder, if you've probably haven't, it would be a weird thought. But if you've ever stopped and wondered when that,
you never know.
When that pest control guy left your house, where did he go?
Yeah.
Or when the plumber that you call because you had a leaky toilet, when he left you and went back to the office, where was the office? 9 out of 10 times, it's a small business park somewhere within 10 or 12 miles of your house that is office industrial flex.
Interesting. Fascinating. So my brother owns a Christmas decorating business, and they have a big truck, and they have a space like that. They don't have an office, but they've got a big, it's kind of like a self-storage space, but it's in one of those business parks like that you're talking about. Yeah,
any of these businesses that we've talked about have to send out invoices. They have to pay vendors. They have to schedule things. They have to do all that. And that all goes on in the office portion. And then any inventory, supplies, stuff that they need to execute what they do for customers is back in the warehouse. And in some instances, they'll pull trucks into that warehouse space at the end of the day so they can lock them up, close the doors and lock them up. Other times they park them in the back. But it's a great product type. We've had tremendous success. In fact, I won't get the numbers exactly right, but I think probably from a pure IRR standpoint, the highest return we ever delivered to investors was an office industrial flex project that we sold before we could even get it leased up. And I think the IRR was somewhere north of 1,000%.
Amazing. Well, when you have another one of those, give me a call.
That's not a common occurrence, but
yeah, of course.
It's a product type that does super well. And once you get them leased up, the value is, the value, the market we have. It's been really interesting. I'm sort of getting off topic here, but, with rates where they've been and sort of what's been going on across the economy and geopolitically over the last 18 months or so, we've not seen as much activity on the transaction side as we had in the 2 or 3 years prior to that. In the last 3 months, I'll bet we have gotten no fewer than 15 or 18 inquiries from either people in the self-storage industry or looking for office industrial flex properties to acquire. So all of a sudden, the amount of activity from buyers has increased significantly over the last 3 or 4 months. So.
Interesting. Okay, we are getting off topic, and we have like 2 minutes. But I'm curious: is maybe reshoring a part of that equation, where people are wanting to have more inventory or more, space, manufacturing space, maybe, or whatever it might be, logistics space here in the U.S. and not overseas? Or is there anything like that may be playing a part? Or what do you see as the cause?
I don't know that it's related to reshoring as much as rates have sort of stabilized. The direction of the United States from a political standpoint, whether you like it or not, is a little more clear. And some of the geopolitical issues outside the United States have begun to settle down. I think it really is more buyers are just seeing a little more predictability and certainty in the future. Okay. And so they're being a little bit more aggressive. They were on the sidelines for a while because of uncertainty. Uncertainty is the biggest headwind, to investment activity. And I think that uncertainty sort of beginning to clear is probably driving it more than anything else. I will tell you that the industrial category in general has gotten a little bit overbuilt. There was a tremendous amount of activity and development activity in the general industrial and data site category over the last 5 years. While it's seen occupancy rates decline because of that new supply, the office industrial flex market has held steady at about a 96% occupancy across the country, and their markets there is tighter than that. So it's actually outperformed this. It's referred to as small bay industrial. And the small bay industrial segment is outperforming the general industrial segment at this point. And we think that will continue. All the projections show that that demand is not backing off. And so we think the future is bright for the office industrial flex product.
I love hearing that. Well, Paul, thank you so much for taking some time today to kind of walk us through that. I know the first couple of episodes of this podcast, we're talking through some of the mechanics of investing in different products, like you say. But yeah, definitely excited to get some more people on the show and more insights into real estate in general. And so I'm encouraging listeners to look forward to future episodes because I think they're going to be a lot of fun. And so I'm glad to talk to you and glad to keep talking to you next episode.
Yep, I look forward to it. I think we're going to have David Lutz, who's our head of property management on the storage side, on the show here. I think it'd be fun for people to get a little bit of glimpse behind the scenes and understand what the whole process of leasing up a self-storage facility and managing it looks like. So that's one of the things we're definitely going to do in the near future. So.
Okay, well, looking forward to that. And Paul, we'll see you next time.
Great.